Hello everyone, welcome back to Economics Destination. After a 2-month break, I'm back with a blockbuster update, and trust me, this one feels like a real Diwali bonus. The GST Council announced a historic reform, simplifying tax slabs and cutting rates on essentials. In this video, we'll decode what's new in GST 2025, how it impacts you, whether the government gains or loses, and what this means for India's economic future. So earlier, GST had 4 major slabs: 5%, 12%, 18%, and 28%. Now, GST 2025 is simplified into 2 main slabs: 5% and 18%, plus 0% for essentials, and a new 40% for luxury or sin goods. This will be effective from September 22nd, 2025, right before the Navratri and Diwali shopping season. In short, fewer slabs, less confusion, and cheaper essentials for every household. Essentials like soaps, toothpaste, bicycles, and kitchen items are now just 5%. Packaged food like biscuits, noodles, and chocolates are now at 0%. Health and life insurance also come under 0% GST, which makes financial protection more affordable. Tractors and farm equipment will only be taxed at 5%, giving support to agriculture. Electronics and vehicles such as TVs, ACs, motorcycles, and small cars will now be at 18% instead of 28%. This is clearly a relief package for the middle class, farmers, and MSMEs, while luxury buyers now face a 40% tax. Well, let's dive into the government's dilemma here. On the benefits side, we've got simplification leading to higher compliance and less tax evasion. Plus, it boosts demand during the festival season, which indirectly results in higher GST collections. And not to forget, there's political goodwill to gain before elections. But on the flip side, there's a direct loss estimated at over 47,000 crore rupees annually due to rate cuts. States might be concerned about compensation shortfalls, and there's a heavy reliance on the 40% slab to balance these losses. So, while you and I enjoy cheaper daily items, the government has to find ways to fill this revenue gap. To fill this gap, the government is looking at increasing efficiency in GST collection through AI-driven tracking and e-invoicing. They're also planning to expand the GST net by bringing more businesses into formal taxation. Pushing digital payments is another strategy to reduce the cash economy and leakages. And of course, stronger compliance enforcement could widen the base instead of increasing rates. Now, this reform is being called GST 2.0, a step toward truly achieving one nation, one tax. It could reduce inflationary pressures, leading to more consumption and higher GDP growth. If successful, India might even abolish the compensation cess, making GST even cleaner. In the long term, it boosts the ease of doing business, strengthens the MSME sector, and signals India's commitment to tax reforms globally. If implemented smoothly, this reform can be the turning point for India's tax system, balancing growth with fairness. So friends, that's the full breakdown of the new GST reform, the Diwali gift for every Indian household. From lower grocery bills to cheaper insurance, this is truly a big shift. But the question remains, will the government manage revenue losses smoothly? We'll keep tracking this for you. If you found this useful, don't forget to like, share, and subscribe to Economics Destination. Also, comment below. Do you think GST 2.0 is a real reform or just a festive gimmick?